Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income generating idea. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. Energy stocks were the biggest winners in 2021 and 2022. And while the energy sector has done over the last year, it can't compete with what's going on in red hot technology stocks. What energy will always have over tech stocks, though, are the dividends. And one energy stock that is outpacing the broad market and it has a reliable high yield dividend is today's pick. It's called Plains All American Pipeline LP, traded on New York Stock Exchange under symbol PAA. John, do you want to explain a little bit here?
Yeah, thanks, Mo. There's not a ton to explain. Its name is pretty good, like Google friendly, and tells you pretty much everything you need to know about its operations. But Plains All American is one of the largest independent midstream energy companies in North America. It provides logistics services for crude oil, natural gas liquids, or NGLs, and natural gas in the United States and Canada. On average, Plains handles more than 7 million barrels of crude and natural gas liquids through its North American network. But more broadly, its infrastructure includes 135 barrels of liquids, which includes crude and gas storage capacity. It also has 130 million barrels of oil or natural gas liquid storage capacity, 18,300 miles of crude oil pipeline, and 1,620 miles of natural gas liquid pipeline, more than 640 trucks, 1,275 trailers, 2,100 crude oil rail cars, and 3,900 NGL rail cars. The company's infrastructure is definitely not static. In February, it announced that it closed on the previously announced sale of its interest in the Keyera Fort Saskatchewan facility for approximately $271 million.
With such a big presence, I want to know, how did it do in the first quarter of 2023?
Oh, really well, of course. And that's why we profile it on Income Investors. In the first quarter, net income jumped 126% year over year to $422 million, or 0.2675 per unit. Net cash provided by operating activities was up 119% at $743 million. And its first quarter free cash flow more than quadrupled to $823 million. Again, more numbers. Adjusted EBITDA was up 16%. Distributable cash flow was up 11% at 62 cents compared to 56 cents in the same period last year. And during the company put $450 million towards its debt, which currently stands at $8.3 billion. And thanks to its solid returns, the company reaffirmed its 2023 guidance.
Let me know if I read this correctly. They raised their dividends by 23%. Usually this, you don't see double digits increases in dividends. What happened here?
Yeah, you're absolutely right. You heard correct. Plains All American's strong, reliable cash flows generation allows it to execute on its capital allocation framework, which is focused in part on increasing returns to shareholders or unit holders. Back in February, it increased its quarterly cash dividend to 0.2675 per unit, or $1.07 on an annualized basis, for a yield of 8.0%. And that's twice the current inflation rate here in the US. This represents a 0.05% increase per distribution on a quarterly basis, or 20 cents on an annualized basis. It's held its distribution at 0.2675 per unit in April. Now, investors may think raising its dividend by 23% and paying down $450 million in debt in the first quarter alone might be stretching the Plains All American bank account, but it's not. The free cash flow distributions in the quarter was $823 million. After distributions, it was $581 million. The payout is also really low for an energy LP at just 60.53%. This gives it protection should something drastic happen. It also gives it the financial flexibility to raise its payout if it wants to. It actually has one of the most reliable high-yield dividends in the energy sector, and its 8.5% dividend yield seriously outperforms every other sector in the S&P 500, which itself only pays an average dividend yield of 1.6%. And that growth is expected to continue with an expected 3-year compound annual growth rate of 12.4% compared to 3.5% for other master limited partnerships.
And are the units showing the same kind of growth?
Yeah, strong industry dynamics have helped Plains All American units trend steadily higher, easily outperforming the broader market. As of the writing of the report, Plains All American stock is up 16% over the last 3 months, 22% over the last 6 months, and 49% over the last 12 months. Again, massive gains no matter how you look at it, but Wall Street thinks Plains All American has more legs, with analysts providing a median 12-month share price target of $15 and a high estimate of $21 per unit.
All right, John, thank you so much for providing your analysis on Plains All American Pipelines LP, traded on New York Stock Exchange under symbol PAA. This company is firing on all cylinders. It's reporting strong financial results, provided robust guidance. Its share prices is crushing the broad market, and it just raises annual dividend by 23%. Permian Basin growth and strong global demand for North American energy bodes well for Plains All American and its high yield dividends. That's it for today. We'll be back with another video soon. Stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.